What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is a little bit of the technicals on the longer time frames, just like we always do, to get a little indication of where we're at, a little update on what we're seeing in terms of that 1348 cross on the 4-hour and where we are in relation to that 200 exponential moving average that has been a very clear-cut sign of potential breakouts in the past. And we're going to be talking about the options chain, a little bit of the max pain going into tomorrow, because I know a lot of you guys like to know where that number is and what that exactly means. But the two most important things that we need to cover are what the heck happened today with AMC's Ortex data. Was there a giant forced share recall? Was there another glitch in the Ortex data? And was there any shorts covering over the last couple of days when we saw those decent run-ups? Now, the other thing is we have something pretty bad coming out of the Atlanta Fed. This is a really bad sign for the economy going forward, and I want you guys all to be prepared for the type of news and headlines that are going to be coming out over the next couple of weeks. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the day today at $13.55, down 10 cents on the day, or 0.73%. Again, market was pretty volatile. We saw a pretty significant sell-off in the morning. We saw it bounce back up to that 380 level and then sold off going into close. But coming over and taking a look at this 4-hour time frame right here on AMC, we are seeing something pretty interesting. So today we did come up and touch this 200 EMA here, but we got rejected, came back down. We are above that 13 EMA right here on this 4-hour time frame, but we are going to need to see the RSI get above its moving average, the MACD flip back to the upside, and the shaft trend cycle to give us a little bit more of an indication of bullish momentum. What I really want to see that's going to entice me personally into maybe buying some call contracts on AMC is price action like this. Remember, when we saw this previous run-up, we saw this break of the 200 EMA and this previous resistance level, consolidation, a little bit of a rim on the 13, and then a pretty significant explosion. That's what I want to see over here in order to really convince me that we are going to go on a bullish trend. Now, if you've been looking at the SPY, coming to all the live streams, you would know that the overall market has that 4-hour cross down, which is a signal of a little bit of bearish momentum. So we're going to have to wait and see. But again, if you guys do want more information on this 1348 strategy, today's the last day to get grandfathered in at the current price. So if you're interested, check out that link down below. We have so many awesome things coming for you guys. So check that out and get in before that price increase. So when we come over and take a look at the options chain over here, we have 34,000 call contracts in the money for AMC going into the end of this week, 9,000 put contracts, so nothing too crazy for this week. Again, that July expiration date's looking pretty interesting here. We do need to get these puts out of the money and these calls to go in the money. But again, we do have a little bit of time for this. We've got about 2 weeks to kind of see how this is going to play out. Now, when we come over to the max pain chart right here, max pain sitting at about 13 for AMC, meaning that this is where the market makers are going to be making the most amount of money on selling all these put and call options on AMC. So we'll see if we get pinned there. Again, it's not the end all be all, but it is always a possibility. Me personally, I'm not taking trades based off max pain on any other stock that I am trading, but for AMC, it does typically like to hang around some of those levels. So definitely something to keep a lookout for. But guys, let's get into this situation with Ortex here. It's pretty wild. We've seen this happen a couple of times in the past, and if you haven't already, make sure you guys engage with the video, hit that like button down below, and drop a comment if you are very excited about the prospects of AMC going forward. So when we look at Ortex over here, we're sitting at about 18.99% estimated short interest. Now, the reason for this is the shares on loan has significantly dropped. Now, Ortex is providing a lot of these estimates over here and basing a lot of these on sometimes shares on loan, estimated shares sold short. But what we've seen on the shares on loan right here, it went from 192 million shares on loan 7 days ago down to 163 million. So what this is potentially an indication of is a large-scale forced share recall by prime brokers or lending institutions trying to get these shares back that were locked in at a previous cost to borrow, a lower cost to borrow than what we're seeing now, this 34% max cost to borrow, this 22% average, or even this 12.5% minimum. If you go back basically 4 to 6 weeks ago, AMC's cost to borrow was still in that 1 to 3% range. So if institutions were able to lock in this cost to borrow, then you could see the lending institutions come back and say, hey, I want to loan these shares out at 22.5% versus that 1 to 3% that we were giving you before. So they take the shares back and then they reloan them out. The other thing and the other possibility that we are looking at here on Ortex is just a glitch. It happened last time. It can happen again. And in my opinion, I know a lot of you guys may not agree with this, Ortex is not out there trying to give us wrong data. The ape community is probably providing them with the most business, so they do want to keep this community right now kind of happy. And it is possible that they are seeing glitches in their system. It's a technology company. It would not be out of the question that some of their calculations would be wildly off. Remember, with the data that they are being fed. So even if there is a problem with manipulation, it's not Ortex, it's FINRA or any of these other institutions that are actually getting this data and pulling it in the institutions that are actually reporting some of this short interest or short data. Now, I do want to get into this situation with the Atlanta Fed because this is really big news that came out today. Welcome to the recession. Atlanta Fed slashes the Q2 GDP to -1%, pushing first half into contraction. Now, what happens is that if you have 2 quarters of declining GDP, you are on paper considered to be in a recession. Q1 was negative. We just got the Q1 revised numbers this week. The expectation was -1.5%. Those numbers came out at -1.6. So now if Q2 then comes out to be negative, we will be fully declared in a recession. Now, here's what this means. Well, we're going to see a lot of headlines in the overall market. Now, again, everybody kind of fully understands the situation with our market right now in the overall economy. If not, I don't know where you've been over the last 6 to 8 months. But when we're looking at this situation as a whole, triggering the recession is going to cause a lot more fear. Now, we've talked about this a couple of times in the past that the Fed has a couple of different things that they can do in order to try to pull back and cool down the inflationary pressures. They can shrink their balance sheet and they can raise interest rates. Those are basically the only 2 things that they can do. Now, the Fed has a really interesting decision here. If they are going to slow down these pulling back measures or these tapering measures and these hawkish measures that they are going to come in with, well, we then could see inflation pick back up, but that's not really going to help GDP at the current time. And that's going to be a metric that a lot of people are looking out for and could trigger some more cascading sell volume coming into the overall market as there's that flight to cash and people are trying to fly to safety in order to kind of wait out these volatile times and get the indication that it's okay to put that cash back into the market. So these larger institutions right now are kind of in a pickle. We're seeing a bear market in the equity market, the bond market, and the cash market. That is something incredibly rare and has not been seen since about 1973. So we're kind of in uncharted territories with the market right now. And a lot of these big institutions, as we've seen with the highest amount of shorting since 2008 over these last couple of weeks, we are seeing these institutions fly out of this market and actually bet against the U.S. equity market right now. So I want you guys to be aware of this going over the next couple of weeks. Be prepared for headlines. They are going to come out. But again, we know where we're headed. We know sort of what the Fed's mandate is at the current time, and we are going to adjust accordingly, specifically with our trades over in the 1348 community. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next one.